9:42 de la mañana está con nosotros Charles Diebel, Head of Fixed Income de Mediolanum International Funds. Charles, thanks for having this time with us.
Good morning.
Good morning. We are talking about Fed from the past week. What do you think about the decision of the Fed? And we are seeing this weekend that could be 4, 5 or 5 interest rate hikes. What do you think about?
Yeah, I think Powell was very clear in terms of, if you like, showing his teeth to the market. They've undergone a fairly strong reversal from where they were a few months ago. And clearly they are concerned about inflation not declining as they had hoped it would. And also growth remains pretty strong. So the combination of the two give them confidence that they need to move pretty aggressively, and the market has moved to, as you say, discounting around 5 rate hikes this year. Certainly, I think that they're going to be relatively consistent to begin with, and that we're going to see a move probably at the first 2 or 3 meetings of 25 basis points. And probably getting towards the 125, 150 level even by the end of this year. At the same time, they're still talking about accelerating the reversal of their asset holdings in US Treasuries. And that will probably kick in at the beginning of Q3 or at the end of Q2, and we'll start to see them wind down their balance sheet quite aggressively. So it's quite a reversal that the markets have to contend with at the moment.
Following from that the euro versus dollar, is inflation still in nemesis of the outlook, or do you think it's in a growth?
Well, clearly the stance from the Fed creates quite a divergence versus Europe. You have what is still a relatively slow growth rate in Europe, and inflation still, by comparison, pretty subdued. Whereas you have the opposite in the US, and they're reacting with stronger monetary policy. So for the time being, we think that the dollar will continue to hold gains against the euro, maybe gain a little bit more. The valuations are a little bit stretched, so we may not be talking about a particularly aggressive move, but for the time being, I think that the euro will remain weak. On the subject of inflation or growth, clearly at the moment, inflation is first and foremost the if you like, the nemesis of the central bankers, and they've seen fairly sharp reversals both from the Federal Reserve, the Bank of England, and even the tone from the ECB has changed somewhat. But we are now seeing them respond, starting to raise interest rates, and we are going to see growth slowing later in the year. So although for now I think inflation is first and foremost a concern, towards the latter parts of this year we may be having a lot more conversations about growth rather than inflation, because I think we'll see a reasonable slowdown, although still at a growth at a reasonable pace, but certainly coming off the heady levels we were, and there may be more concerns about the growth outlook then going forward.
What do you think about emerging markets in this year? Because last year was a bad year for emerging markets, with the exception of China and India. But what do you think about 2022 in emerging markets?
Well, it's a very good question, because it's not one size fits all. Normally, in these sort of circumstances, with global growth reasonable and perhaps the dollar not moving too much, although it is quite firm at the moment, you'd think that that's a pretty benign backdrop for emerging markets, particularly with the commodity cycle as it is in pretty robust shape. But you're seeing a lot of divergence, exactly as you point out. So there are idiosyncratic geopolitical stories such as Russia. There's China, which partly because of its property sector is experiencing a slowdown combined obviously with its zero COVID approach, whilst other countries are doing relatively well, and places like Indonesia continue to perform quite strongly. So I think it's going to, I think it could be a good year for emerging markets, but I think you need to pick the right one, and particularly those where valuations are attractive. Somewhere like Peru, for example, is very positively skewed towards the commodity cycle. Its political risk seems to be less than it was previously, and that the market has moved back to what are relatively attractive levels from a fundamental point of view. So somewhere like Peru is an example of the kind of markets I think you should be considering.
Thank you, Charles Diebel, Head of Fixed Income and Mediolanum International Funds. Thanks for having this time with us.
Thank you very much.